How's it going, everybody? My name is Antonio, and you're watching another episode of the CEO Barbecue, which this time will have me traveling to the border between Chile and Argentina. Joining me on the barbecue today is Alan Sabet, the CEO of Mogotes Metals. But of course, no kind of grilling or traveling is happening before my favorite part of every episode, and that is, of course, the warning that is on your screen right now. For one, you're obligated to read and understand it. And if you don't agree with it or cannot understand it, you should not be consuming this content. This is not your basic disclaimer of, oh, I'm not your financial advisor, although it is partly that. But this is mostly an actual warning that might help you not lose money, which, by the way, is the norm and should be the expectation in this sector. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including geopolitics, macroeconomics, commodity prices, and many more. In addition, I need you to understand that this channel is a business that produces video interviews in exchange for a monetary compensation. More specifically, this means that this company has paid for the production of this interview. As a general rule of thumb, you're going to be better off understanding that most company communications online, and I would rather claim that it's all company communications online, albeit this interview, their website and their presentation and their social media accounts and everything that these non-revenue generating companies do is intended as marketing. And although I don't make buy or sell recommendations because, in my opinion, there is a clear conflict of interest, many out there do, and you should be aware of that inherent bias. That bias won't always be clearly disclosed with everyone out there, so it is safer for you anytime you're watching any type of company-specific content, including this one, to approach it with a dose of skepticism and assume that the party telling you about it is biased, because there will always be a bias, again, albeit disclosed or not always as visibly disclosed. Unfortunately, at least to my understanding, nobody out there has any special parahuman abilities. Same goes for me. Unfortunately, I'm not a magician, and the guests here are not psychics. So we don't possess any superior knowledge about what's going to go up, what's going to go down, or what's going to go in circles. And in most cases, none of us know whether any of the company's activities will result in a success or not. Also, unfortunately, try as I may, I am not always going to be able to catch all red flags or all challenges with the companies or all shenanigans, whatever it may be. As it has become obvious by now, I think I don't have a long enough track record to speak of, and I still have no idea what I'm doing. So you should never rely on what I say in here, as I cannot guarantee the quality of anything presented in this video. This is all to say that you shouldn't blindly trust me, or for that matter, anybody on the internet, and you should always do your own research. Charlie Munger has many great quotes, but one of the very fitting ones to this line of investing is, if you don't understand it, don't do it. In addition, no guarantees are going to be made here, besides that there will be forward-looking statements in these conversations. This is a conversation that is general and impersonal in nature, containing hopes for future events that may or may not take place, and forward-looking statements about things depending on many different factors, both within and outside of the company's control. Please be aware of that. Be aware of the inherent risk to investing. Your capital is at risk. But also be aware of the increased risk of investing in non-revenue generating companies that operate in the harsh and complex reality of the mineral exploration industry. And please talk to someone who's proven to know what they are doing, like a professional investment advisor with a good long-term track record, as well as I mentioned, do more research. And you don't do research on YouTube or social media. Before taking any decisions, please visit setterplus.ca, where you will find the company's official filings, where you can go through the MD&A, the financial statements, the management information circular, and if and when available, the NI 43-101 technical disclosure. If you don't do that, you're highly likely to lose your money. There are disclaimers on your screen right now. Again, if you don't enjoy losing money, pause the screen for each one, read them, and be careful out there. With all that made clear, I can actually kick off this interview with Alan Sabet, the CEO of Mogotes Metals. This company is listed as MOG on the TSX Ventures Exchange, where an average of about 280,000 shares trade daily, with a 52-week high of 21 cents and a 52-week low of 10 cents. With a market cap of about $29 million and about 236 million shares outstanding, today this is a 12.5 cent stock. I see 64 million warrants, 6.3 million options, and 1 million RSUs added to the shares outstanding. That leaves us with almost 310 million fully diluted shares, meaning an increase of 30% in shares outstanding can be expected if those options and warrants get exercised, which would then result in about a 23% ownership dilution if, and that's always a big if, but if those warrants and options get exercised. And for context, the majority of the warrants have an exercise price of about 30 cents. Management and insiders are listed at 19% ownership on the November presentation, whereas institutional ownership is listed at 38%. With names like Euro Pacific in there and other big institutions that you can probably see on your screen right now, leaving under half or 43% to be specific of the shares in the implied hands of retail. The last financial statement, which is dated August 31st, shows me $7.2 million in current assets, most of which at the time, almost $6.9 million was in actual cash, with some receivables and prepaid expenses on top of that. Total liabilities sat at $155,000 in the form of current liabilities and specifically accounts payable and accrued liabilities. Although it is worth noting when you're listening to me talk about the balance sheet here that Mogotes did raise $3.5 million in two tranches, with the second one closing in late September at 14 cents per share with a half warrant at 30 cents. And again, that was after the date on this financial statement. So this capital is not yet reflected in the numbers I went through on the balance sheet. That same financial statement from the end of August, though, tells me that on average, over the last reported 9 months, Mogotes spent $6.3 million actually in total for that 9-month period. Taking out 0.3, which was a share-based payment, leaves us with a round number of $6 million to work with. $1.5 million of that money went into what I would call administration, with the largest part of that spend being the various forms of compensation plus fees, so professional fees, consulting fees, regulatory fees, and director fees combined accounted for about 57% of the total spend. 30% was attributable to the overall general administrative spend, and 13% to investor relations. All in all, this was an average, as I intended to tell you, an average monthly cost over the last reported 9 months of almost $170,000. Exploration and evaluation expenses here do not get capitalized, so you can get them, you can see them on the expense sheet right up there, sitting at 4.46 to be more specific, $1 million for the 9-month period, with the largest chunk being the 31% or $1.4 million that was spent on drilling itself. The second largest chunk being the 18% spent on geologists and consulting, and a close third being geophysics, which accounted for 16% of the exploration and evaluation spend. In terms of ratios, I have two of those here for you. The overall exploration to evaluation ratio, exploration and evaluation to administration ratio would be close to a 3-to-1, which means that close to 75% of the overall spend went to exploration and evaluation, 25% to what I would call bureaucracy.
I do want to jump in there. I think that's, although I'm not unhappy with 3-to-1, I would mention that we're a newly listed company.
Yeah, and we'll get to all these things later on in the conversation. So I think that's going to become more clear. And I do have questions, Alan, for you later on as to how you're going to manage G&A and what that's going to look like.
The point is all that G&A, a lot of it is listing costs. That's all I was going to say.
Okay, that's fine. And the second ratio that I typically do at this point is the drilling to marketing ratio, which sits at over 7-to-1. As always, though, I would like to remind everyone that, as Alan mentioned, this financial statement is nothing more than a snapshot in time, in this case, specifically at the end of August of this year, and the finances will have changed by the time you're watching this. Because one, as Alan mentioned, this is a newly listed company, but also because this is a non-revenue generating company that uses its treasury as well as the public markets to finance operations. So things are, well, different and could be different from quarter to quarter. Try as I may, I'm not infallible, though, and I'm no stranger to mistakes. I routinely make mistakes in my reading of an understanding of the numbers. So to be safe, you should head over to setterplus.ca to look at all the numbers yourself. Make sure you're getting the full picture. For Mogotes, the full picture is fully focused on the Vicuña district, which is, of course, on the border between Chile and Argentina. And we're going to talk a lot about how, what, and why is happening here. But Alan, this is your first time on the barbecue, so it would be fitting for me to shut up already and let you do the talking here. But we have to go through the smell test first, starting with you personally. Who are you, and why should I trust you with my money?
Hey, thanks for having me on, Antonio. Look, I'm the president and CEO of Mogotes Metals. In terms of who I am, I'm a business person. My background is, I grew up all over the world. I'm going to give you a long story. I grew up all over Africa, actually. Tanzania, Lesotho, and Zambia are among the countries I've lived. I speak Swahili. My background is actually Iranian background. I speak Persian as well. So I'm a global traveler, global citizen. I've lived everywhere. And then subsequently studied and worked in Australia. My career has taken a few paths. I started out in technology entrepreneurship, then moved into McKinsey and Company. I was involved in turning around or restructuring a number of resource companies in Australia, among them, big oil and gas companies. And South32 was actually one of the companies I worked with. And after McKinsey, we moved into myself and my brother, Anis, moved into a prospecting company that we started out of Australia. And so we've been running that, and in that process, basically took prospects from the greenfield stage and advanced them. About 3 years ago, we were able to be part of, as shareholders of Filo, the discovery of Filo. And that was obviously a significant event. And, in the years running this prospecting firm, we had also gained some capacities and abilities in remote sensing, which is, techniques to assist with mineral exploration using either satellite imagery or other kind of remote, imagery products. And, doing an analysis of the Vicuña district helped us understand that the alteration and the signature that was being targeted over at Filo del Sol, extended south. So from that, we approached the owners of that exploration ground, about 3 years ago now, and negotiated a deal over that. And from there, we put together a really, I would consider, world-class exploration team for porphyry and epithermal deposits, substantial experience in South America in this type of terrain and in this type of deposit. And then we started going. So I can tell you the story after that, but that's who I am.
I think part of the story is going to become clear through some of the questions that I also have lined up, which I'm sure you're going to love. But insiders here own 19% of the company. And since you went public earlier this year, there has been no insider buying, obviously, this year, but you acquired those shares before that when you put the company together. What's your average cost of acquisition on those shares? Were those founders' shares? What does that look like?
Yeah, so when the deal was initially done, it was paid out of pocket out of an Australian company, our company. So we paid, the signing payment there was $150,000. We subsequently spent something in the ballpark of 400,000, maybe 500. I have to check, depends on what you put in and out, on evaluation, on legal work. The ground hadn't been explored in quite some time, so it required quite a bit of work to get it back in good standing. Recruiting the first geologists to go and do field trips, sampling, a whole lot of work. And from there, we reincorporated a new Canadian entity. And so the deal was assigned over to this Canadian entity at essentially zero cost. So on the books, cost base is going to show as very close to zero, but the reality is actually that we took significant risk and incurred significant expense out of our own pockets before that was done, with no guarantee of any kind of a return. Understanding that at this point, the project hadn't been worked for something like 20 years, seriously. And, it was all risk, and there was a good chance that nothing would be found. What subsequently happened, though, was we raised money, put together a good team of directors that we know and trust, including Stephen Nano. Stephen's a really accomplished geologist who was involved with many discoveries in his career and is familiar with this terrain, with this part of the world. Stephen came on, and basically Pete Mullins also came on, Phil Williams came on, and we were able to raise money to get the project really started. We also put in our own cash. Every director put in their own cash, and that was at 10 cents, basically in late 2022. Again, very little known about the project at that time. With that money, we put together a field camp, and we got bulldozers heading up the road, and we started clearing up the roads. So one of the things that we identified was the extent of sampling on the project before we came onto it was rather limited. And one of the reasons it was so limited was because the road access through the project was actually quite limited. Only a few parts of the project were accessible. Okay, so we started putting in some more roads and started getting together a sampling team to basically extensively sample that ground. And then we were off. So with the sampling team in place, with the camp in place, we were able to then add a bit more to the funds, and we just step by step rolled it forward from there. Every time we went out and did exploration work, and that continues to be true, we found encouraging data that helped us to take the next step, raise more capital, and advance the project.
And again, those are all things I think we're going to touch upon more in depth. Really, what the important part for me at the beginning, Alan, is to understand skin in the game. So I see the 19% in the presentation. What I'm wondering, though, is how important is this investment to you financially? All the money that you've put before into the exploration when it was private, putting the company together and all that, what part of your portfolio would you guess is currently invested in Mogotes?
Myself, that's like 95% of my life.
Okay.
Yeah.
Okay. Are there any royalties on the project after you put it together?
So there was a pre-existing royalty to a very old man who, as of yet, we don't even know where this person is. And it dates something like maybe 20 to 30 years before we acquired this project. And it's capped at a figure, I believe, 300 to 500, not more than 500,000. It's a 1% royalty over a subset of the ground capped at 500,000. It's in the 43-101 technical report. But the validity of it is a bit dubious, but for clarity, that is there. And then the only other remaining interest would be obviously our partners that we're earning in from. And so, the deal, which I can outline, is essentially we get to 85-15, and it's a contributing joint venture. And so if you don't contribute, you get diluted. And if they dilute below 10%, then their interest converts to a 2% royalty, of which we can buy back that royalty in its entirety.
Well, you don't look like a very old man to me, so I wouldn't assume that old man is you. You said also you don't know where he is, but what I was really getting at here is, do you personally own any royalties on the project? I am just going to assume that the answer is no.
Oh, no, absolutely not.
Yeah.
No.
Do you
personally? No.
Yeah. Do you or any of the other management members or any of your close families own a service company, like a driller, or marketing company, helicopter company, or a broker or something else like that is currently?
No, I hope these are your normal questions, but no, absolutely not.
That's a smell test. I have to go through. I have to go through these questions, and I'm happy you're laughing. But if you see how many people answer differently, you might no longer be laughing. Like it happens in the sector more than I would like it to happen. So I have
when
to
we're
go
past
through.
this. When we're past, I understand. When we're past the smell test, I'll explain to you how expensive things are here and how we've managed to accomplish quite a lot with very little dollars. You'll see it's basically impossible to play around here.
I do want to talk about that. And oftentimes people call junior mining companies stories, and the truth is, most of them are just that. Most of them are just a story that gets told to investor. But I don't want to invest in stories. I want to invest in businesses. And sure, this is not a revenue generating business, and most of them don't even intend to generate revenue ever. But there still can be a business case. What is the business case for Mogotes, and what's the timeline that you're aspiring to?
Look, I think it's familiar to a lot of investors in this sector that the business case for an exploration firm is to make a discovery. And then once you've done that, the value of the shares that you've invested in will substantially increase, depending on the size and scale and attractiveness of that discovery. From there, a number of pathways would emerge. One of them would be being bought by another larger mining company who would take it to production. Another one is to kind of develop it and slowly study it and understand the best means through which it can be economically viable. It could be mining it, could be partnering with someone else like Lundin's have done with BHP next door, 50-50, so they can do half and BHP can do half. We're open to all the possibilities, but in a broad sense, our mission here is to drive a discovery of a large copper or copper, gold, silver deposit.
What's your best estimate of how long that's going to take? I understand it's very hard to pinpoint a specific timeline on it, or specific dollar amount on it, but you do have comparables that you can go off. I mean, Filo was discovered in what the hole was titled hole 41, but they did a whole lot of work before that for years and years and years. So what's your estimate? How long can this thing take?
I can talk to you about precedent. Filo is one precedent, but there's another precedent as well, and that's Lunahuasi. Okay, so yes, the Filo precedent taught us something. It taught us that good creative geologists like the Lundin Group are able to make multi-billion-dollar discoveries so long as they, take a systematic and methodical approach and take a little bit of risk. Risk is required, and that's what this was, huge risk. And, hats off for everything that they've done, and I always say that. So that precedent is many, many years of work. And one of the reasons is they were establishing there is something in this part of the mineralized belt to be found. They did establish that. That's well known now, right, from the discovery. So what can we learn from that? Well, there's a number of geological models, techniques, methods of exploration that can be applied that will get you there faster once you know what you're looking for. So I'll take you to the next precedent, which is Lunahuasi, right? Filo makes a high-grade discovery in 2021, I believe. And you've got an alteration zone sitting between Los Helados and Filo del Sol, which was called at the time, and if you look at the Filo literature, was called Petroglyphs, and it's split roughly between NGX and Filo because of the way the land package goes. Undrilled completely. Filo makes the high-grade discovery, and NGX, I think, starts moving towards, looking at this Petroglyphs story, partly because of, the discovery that Filo made. Within a year, they drilled it. First couple of drill holes were a discovery hole for NGX. And that's what really propelled NGX from, a 100 to $200 million market cap company to, I think it's a $2 billion company today. And that process was a year from Filo basically finding Filo del Sol. So your question, going back to it, is how long does a discovery take? How long will your discovery take? How long does a discovery take? Really depends how much knowledge you're able to gather, obviously to what God has put in the ground. But when you're in the right setting, which you could see with Lunahuasi, they were in the right setting, they were in the right geology, and they were with the right management team who took the risk, but also applied the learnings that were gathered over the decades that they've been here. It can be rather fast, okay? So for our case, I can't tell you anything definitively. What I can tell you is that, are we in the right place? Yes. In our opinion, we are. We're at the extension of that Miocene belt that starts at Los Helados. I mean, it's actually quite long. It's 1,000 kilometers, and many productive deposits are on it. But in the Vicuña district, you got Los Helados, then you come down south, I think it's 10 Ks, you get to Lunahuasi. Go another 5 Ks, you get to Filo. And then you continue on, and you're into our ground. So we're in the right place. We're in the right age rocks. We're in the right structural setting. We have extensive alteration, extensive copper in soils. We have extensive mineralization across the system. So we're in the right place. Now, how long are we going to take to find it? That's a matter of, in many ways, chance, but we're applying all of the top tier knowledge that we've picked up from our neighbors to make it faster. And you can see in the last 2 years, we've really taken this project quite ahead.
Part of the timing question for me goes back to capital. And this is high in the Andes. You're looking for big porphyries. Usually you have to sink deep holes to do that. I believe Filo's discovery hole was 900 meters of 1.8%, if I'm remembering correctly. But usually not cheap to explore and drill those deep holes. You've spent a lot of money on it so far, as you said. How much more do you have to spend before that next milestone, if you will, in your business plan is hit?
Well, the good thing about our business plan, Antonio, is that the next milestone isn't the discovery hole per se. These things are sometimes vectored into. Okay, so I think, and again, if you look at precedent, for example, Filo for a second. Filo just announced a hole 116, and you can tell me if I'm swerving around too much, but Filo just announced a hole right on the southern border with us. Okay, hundreds of meters of good mineralization. I don't want to quote the exact parameters on the hole. If you give me a second, I'll pull them up. But this is probably their best hole in the south in the entire time that they've had this project. Okay, how did they vector onto that 20 years later? They did some trenches. The trenches showed them hundreds of meters of good gold numbers. They did another trench, hundreds of meters of good gold numbers. They did another trench, hundreds of meters of good gold numbers. They hadn't drilled any of this. They just punched a hole into these auriferous veins, and the results came out 2 weeks ago, and they're right on the border with us. So the trenching that I mentioned, 230 meters at 0.36 grams per ton is one of the trenches. They've got a few of those trenches. And the interval, 610 meters at 0.46 grams gold, 0.15% copper. And if you look at the section that they released, that's looking like the best hole they've got in the south of the project. So now, taking your question, how much will we need to spend? It can be relatively little. It depends. If you step the project forward in a systematic way, you're able to get the right data. You'll then be able to put the right drill hole. You'll then get the discovery in short order, right? So the important thing is, once you're in the right place and you're applying the right techniques, you systematically step forward so you can de-risk the exploration prospect or target. And then the number of drill holes or the meterage of drill holes you need will substantially reduce. And that's the approach we've taken here. We took a step back. We extensively sampled the project and it lit up. Then we were able to also then do geophysics in the same way with a step back. We did geophysics across regional geophysics with MT and with IP. We were able to then do infill geophysics. We then also put good road access across the project. So our people were able to get on the ground and map many parts of the project that were completely unmapped. We're following that up. We've started now in this field season with trenches. Just like how I described the process to you with Filo's best hole in the south, the trenches are going to guide us to the juiciest bits. They're almost like a horizontal drill hole. You're paying 1/10, 1/50th of the amount of a drill hole to expose huge amounts of rocks. You know, one of the issues out there is that there's a lot of loose cover laying about. So you expose huge amounts of material. You get in there, you sample it, you get geochemical data, you get geological understanding, you get to map it, and then you get to identify the sweetest bits to drill. So it's really a fantastic step that de-risks the project. So with this kind of approach, you can anticipate to reduce the spend significantly. But I can't tell you exactly how long, how much. That's not something that I think anyone should be able to tell you at this stage of a project. So if they do, you know, you probably want to question how they're possibly going to tell you that.
I was not setting you up, although I would typically follow it up with those questions when people give me those claims. Where is that coming from? Do you substantiate it? And for me, it's actually more important how you answer the question than the exact answer you're giving me here. I do have specific questions, by the way, about some of the you have been hitting argillic and to philic intermediate alteration. So I do have a couple of those questions, and one day we should get maybe some of your geologists or whoever
for
to
sure.
sit down for.
We'll bring Stephen on. We'll bring our people on.
That'd be good to do kind of a deep dive, sit down for an hour and a half or something and talk about the package. But and a big part of the way that you've marketed the business so far, I almost said story, but we've agreed we shouldn't call these things story. Well, at least when they're not. But the way you've marketed your business so far is we are close to Filo. Again, the project is called Filo Sur, which is Filo South, if I understand correctly. But again, Filo's been in the district for a while now. NGX2, the district has been worked throughout the years. As you said, your land package was worked 20 years ago or something like that. So there was time to pick up more land. There was time for someone else to, pick up your land.
Yeah.
But why they didn't? How come? Why were you able to get your hands on this land package if it's that close to these discoveries and as good as you think it is?
Yeah, it's a great question, and I want to be clear about the answer. This land package, as you call it, or exploration ground, it did not look like this when we picked it up. This is why, when we talked about, when we started the company, how much money and so on, this land package, because of the lack of historical exploration, it wouldn't maybe look as attractive as you see it today. The location would have been top tier, of course, and of course that should attract anybody. But when you looked at the geological data, when you looked at it, we did inherit some historic drilling, 12,000 meters or so of historic drilling. We inherited some sampling and a very limited geophysical data set. But on the basis of those data sets, without really having the eye on this big prize of Filo del Sol, of this discovery, without that discovery, those data sets would not be so compelling, right? It's the discovery of Filo's high-grade hole and the size of the prize that makes you look at everything all over again and take basically a ground-up approach to the project. So that's what we did at significant risk. That's why I was trying to say earlier, it was at significant risk that this work was done and expense. But that work then showed, look, the extent, and I'm just going to give you some examples, but the extent of the copper or gold even in soils is much larger than previously thought. It goes to the east of the trend, it goes to the south, and so it really expanded the scope of what an exploration target could be on this project, okay? Whereas before they were identifying, very close to the surface, low-grade porphyry, and they drilled it, what we're looking at is a number of larger targets previously untested by drilling that were not even identified because they were not sampled, they were not walked on. Nobody even walked on a lot of them, right? So this was not obvious in terms of the data that we have. We paid and risked to get this data. Okay, so that's the first thing I would say. So a number of data sets are similar to the soil in that regard. So I mentioned electrical geophysics. If you take our technical report, the electrical geophysics was focused on a small area of alteration in the center of the project called the Colorita zone. And it was a number of ground IP lines that are relatively shallow seeing. Okay, so like you'd be able to get about 200 to 300 meters of reliable data out of those lines in terms of depth. What's the story at Filo, and what's the story of the discoveries of porphyries around the world today? They're not generally, going to be discovered sitting at the surface. We're looking at a deeper target. If you look at something like Atex Resources Valeriano discovery, up to 1 kilometer under the surface. So what geophysical data was available when we got this property? It was a few small IP lines over a small extent of the property that didn't get to see that deep. What we did, extensive spaced geophysical stations, so you get three-dimensional data that can see down, in the case of MT, up to 1 kilometer in depth. In the case of the IP technique, 600 to 800 meters in depth. And these are ballparks. And so, boom, you're getting to see the subsurface in a way that wasn't visible before, wasn't in the data sets before, and therefore could not have been compelling to any potential purchaser. So all of that is to say we made it look interesting through the work that we did. And I'm not trying to be a braggart here, but it wasn't obvious and significant risk had to be taken. Number one. Number two, there were other people who tried to get it, including the neighboring companies. But I think what the key is that in the process of the 20 years that people have been working in this district, they'd probably looked at this project a few times and seen what I just said to you, a bunch of not so compelling data, not so comprehensive data, big area. And if you're sitting on a monster that looks like it runs north, south, east, and west, you're punching holes in that. You're a bit heads down and you're focused. But what I can tell you with my full conviction is that the information that we have today, and based on the inbound interest that we've had today, from the information that we've had today, if this was available when we got this property, we would not have had the fortune to pick up this land package. Definitely not. We would have been outbid by 10 to 1. Like this, it wouldn't have been possible. But it was, and we do have it, and we did manage to do all of this work that proved up these targets.
How does this compare, and specifically that process, but also the package, the exploration ground that you have? How does it compare to some of the other early stage juniors in the region, though? Like you have Mirasol, which is, I believe the stock is going to remain flat, maybe slide to up. Been a while since I looked at it. But Sendero Resources did it well for a very long while. They drilled, wasn't there. The stock suffered a lot since then. How does your business plan compare or differ from those?
Oh, well, in this sector, in exploration, one of the interesting things is that the ground kind of helps you run your business plan. So when you talk about those companies, I'm first of all not an expert in those companies, but what I can say is I know some of the people. But let's just focus a little bit on the ground for a second, and I'll step back and answer. Their success, our success, to a large degree, depends on what is under the tenure that we've got. Okay, and that's why it goes back to, for me, are we in the right setting? Are we in the right place? Are we seeing all the right signs? So for us, we are now, and we're advancing, and we're able to raise money to drill, and we're managing the process well, systematically. We've got very, very good scientists working on this. Some of the best porphyry exploration geologists in the entire world are working on this project with us, including guys who have worked at Filo. And so that's what we're doing to improve our odds of discovery. We're in the right spot with the right people, and we're not going to stuff it up. That's the main thing. Now, for your question on the peers, Mirasol, and I think you mentioned Mirasol and Sendero. And are you asking for my perspectives on them or the differences?
The differences in not only your land package, but also the process that you're going to follow. Because again, one of them was not a success or hasn't been a success so far.
Well, look, let's talk about Mirasol for a second. Steven Nano, who's our technical director and works closely with me on the program here, was one of the founders, along with, I believe, Tim and one other person of Mirasol many years ago. So they put together this land package that together, I think, over the many years, the land package that Mirasol has. So I think their approaches might not be all that different. Top tier geologists tend to think similar. They want to collect systematic data sets. They want to collect systematic geophysics. They want to get the best information to make the least risky drill hole. It's a question of the ground, and it's a question of, some of the other things that people might find differentiation in. But as far as, differences go, we're obviously in a different part of the Vicuña district. And you just, look at a map, you can see they've got a great land package as well, and they've got some great prospects as well. I can't say that I have technically evaluated them. I'm not a geologist either, but I'm excited, for what they can pull off. And I know Tim. I think Tim is a great guy. And, from the perspective of management, land package, approach, for me, it looks all very, very positive. And I'm hoping that they'll be able to make a discovery over there, because that would be a fantastic, when we picked up this project, there was no Lunahuasi discovery. In fact, one of our early marketing things was to say, look, here's the district. You got Filo, you got Los Helados, and you got us. And there's a lot of alteration here. And, Lundin Group is targeting their drill holes based on alteration. Here's a big alteration zone that has not been drilled, and it's Potro Cliffs. And here's another one, and it's here at Mogotes. And then they drilled Potro Cliffs, and it became, Lunahuasi. And I really hope that's what happens over at Mirasol's prospect. So I'm watching closely, and I wish them the best of luck. Different parts of the land package, different bits of ground, different types of targets, but they could easily make a discovery. Anybody could. We're in a very fertile district that's shown 3 discoveries in 5 years. So it's difficult for anyone to discount anything from happening, regardless of geological dogmas and theories. And geological dogma has been proven wrong many, many times in the history of top tier discoveries. And those top tier 1 discoveries, they often have characteristics that would fly in the face of what you would expect. Almost all of them would have 1 or 2 attributes that would, this shouldn't have been here. This shouldn't have been on this structure. This shouldn't have been like this. This chemical shouldn't have been like that. And, you just hear countless stories like that. And you should remember that anything is really possible.
Anyone can make from a geological perspective, I suppose you cannot write it off completely whenever there's no discovery in the first drill hole, of course.
No.
But from a company perspective, there's also execution and financials and market fundamentals and so on and so forth. And in your case, you had a news release this summer, late this summer, I believe. Strategic mining investor subscribes for private placement. That's a very coy news release. Who was it?
I think it was clear in the news release that we're not going to be releasing the identity of the strategic investor, and that's part of our agreement. Yeah.
Is it, you call it a mining investor? Is it a mining investor, or is that kind of an umbrella term for exploration, development, and mining at the same time? Is it an actually produce?
Okay, let me
Okay.
rephrase. A strategic investment from a mining company which has production in South America.
Okay. That is,
Yeah.
that's a better way to put it. It does shorten the list, leaves some room for speculation. I respect your decision and your agreement with them not to make it public. I suppose at a certain point in the future, it's going to make more sense. But why I'm asking you this is because the Vicuña district, and it seems like we're going off topic, but we're not. Want to stay talking about the Vicuña district, and then we'll get specific about your land package. But the Vicuña
Yeah.
district as a whole, or at least your neighbors, do seem to be moving in that direction of, I dare classify the district more as a development district now instead of the exploration play that it was 2 or 3 years ago. So, what's the effect of that transition from exploration to a development district on your company specifically?
The transition from a development story to an exploration district.
The other way around. So the transition from it being an exploration to it now being a development. I mean, these two, so Filo and Linawasi, they are eventually going to be built. Now, when and how and who and whatever that remains, I suppose, to be determined. But
Yeah.
they're going in the development stage. How does that
I've
influence you?
Yeah, I've said this before, and I don't want to sound overly promotional, but it's hard to overstate the importance of that. Um, you know, you used the word story before, facetiously saying, what, we shouldn't be calling, nobody should be calling a company a story. It sounds made up. In this case, you're saying the biggest mining company in the world and the Lundin Group, who are very, very accomplished people, they're making a mine here. Not one mine, actually, two mines, Jose Maria and Filo del Sol. Actually, we don't know if Filo del Sol will be a mine, but you can assume that based on their, the purchase price and the seriousness of the players, that they're going to advance to mining. So what does this mean? This is not a story anymore. This is a real place where real, rocks are going to be broken, mined, producing copper, helping the world. So this is real. There's copper here. It basically crystallizes the reality of this. And if you can think forward a little bit, and maybe look at some other big copper districts and how those unfolded. And it comes to mind is the biggest copper mine in the world, Escondida, and how that has unfolded, and it's still unfolding now. Is that it's expanded, it's moved in all directions, it's become bigger and bigger and bigger over time, and it's going to keep going for decades, likely. What's going to happen over here? We're tens of meters away from the resource boundary of what's likely to be mined into the future. And if it's the size that we can see from their resource modeling, if it's that scale, it means that the ground around it, not just us, but definitely us, is going to be important. From what perspective? I think from finding it's a discovery perspective, but even just from the perspective of infrastructure, logistical requirements, operational requirements. A mine of the size that we're talking of, you generally don't find free ground around it for a number of reasons. Yeah.
Do you think it's giving you pressure, though? That was kind of where I was going with the question. Is it giving you pressure from a timing perspective? Whereas, I mean, again, they're moving into the development. Does that mean that you either have to be in development in 3 to 5 years yourself, or this thing is not moving forward? Like, is it giving you that kind of pressure?
No, I think it's even better for us. It's the other way around. The longer that we are here and we're exploring is the more important this land package becomes. The longer that mine is developing and being planned, the more that this land package is just more and more important. I'm just thinking, sitting, imagining myself in the seat of somebody who's making a mine next door. It happens to me when I'm exploring and I say, look, this is such a good prospect, but there's this other next door area that I need to get. And the more I explore my prospect and I find, positive drilling, positive sampling, the more I'm urged to pick up that next door prospect before it gets too expensive. Okay. So that's the lens with which I would view this. We're here, we're exploring, we're financed, we're capable, we're finding things. And as an added benefit, guys next door are going to try and make one of the biggest copper mines in the world. So, let's wait and see what happens. The more that they work, the better for us. And also same for Mirasol. Mirasol, lovely, great company. If they make a discovery, it just proves this is a fertile district, and there's going to be a lot of fruits.
Why I'm asking you this, Alan, is because I'm thinking still on the topic of the district and Filo and what happened there. Filo got again acquired this year in what I would call the advanced stage of exploration. So how did that takeout change the environment of the district for you? Are there different faces in the region? Are there you've gotten a new phone call with the I suppose with the investment that you got in? How is the business environment changing, and is it changing your business strategy because of it?
There's a few things that changed at once, Antonio. So it's a number of variables, and I've mentioned this before. Is that Argentina has also changed quite positively and dramatically as far as an investment destination. Before even you consider the district, a couple of years back, you talked to the major companies. The first question I would ask is, Argentina, yes or no? And a number of them had a no mandated from strategy discussions or corporate level decisions on frameworks for investment that basically barred them from investing in Argentina. And so that was a no. So that immediately ruled out a number of corporate M&A opportunities, mining companies, and so on. That's changed. So since this change of government, those no's have turned to yes. That's one thing I've seen. And those people also have aged out of some of those positions, and new younger people have come up in a number of these mining companies. And so the appetite, so those two things at once, and the appetite for let's get into Argentina is revved up significantly. So that's one thing. Aside from the Vicuña district. And then on the Vicuña district, for sure, we're getting more interest because of the transaction. And that's we'll see how that unfolds. It's important for us to stay focused and focus on discovery, and keep the doors open to all of the different avenues. I'm not sure if that answers your question, definitively or no.
Are the different avenues you're referring to here potentially a JV? Like would you be looking for an asset level deal? I suppose at this point you have your own money, at least some of it, where you can finance at least one more drill program before having to do an asset level
Yeah.
deal. But is that something you'd even entertain in the first place?
Well, the deal with if you've ever dated a lady or anything like that, the deal is you start talking first. You don't talk about the end game necessarily at the start of the conversation. So we entertain all conversations. Obviously, we have our desired outcome. Our desired outcome would be to make a discovery. We do have finance. We are going to explore, and to any parties that we're discussing with, conversations generally are always had. But my preference, the preference of the company, is finance only, not an asset deal, so that we can make a discovery and the shareholders are all rewarded. Having said that, all conversations are always entertained, and things always unfold and emerge in different ways. So you might start talking about one thing and it ends up being another. And I've seen that happen a number of times as well.
I like your confidence in my game where you're like, if you ever even have spoken
Well,
to a
the only
leading
thing is that I know that you got married quite young, so I kind of stopped that whole part of the conversation quite early.
You, Ellen, you initially had a run in this in the stock in the share price from a low of 12 cents to a high of 21 cents on the back of the rock chip samples and trend samples that kind of gave you that new zone. Then at the beginning of September, it gave all those gains back when the initial assays from hole 1, 2, and 3 came out, with my explanation being that the grade and thickness of the intercepts wasn't there in a way that the market expected it to, especially again in the context of that discovery hole at Filo. But so we can do again an interview with one of your geologists in the future,
Yeah, we
talk more in
should.
depth about the rocks. But
Yeah.
what are they telling you? What are your geos telling you? What happened? Why is the grade not there the way they expected it to?
Let's first talk about market expectations before we start talking about the grade not being there, because I don't think that's an accurate characterization actually of our drill holes.
Okay.
Market expectations on a company that's been private for 2 years is just that some people are impatient and they've had to kind of sell their shares. So we know we just came public in June, and I tried to allude to that earlier. So and for some it's been a 2-year journey, and I would say that could have factored into that as well to a degree, right? So you wait for your chance, and that might have been what happened. As for the drilling, you just make clear for everyone, I would like to make clear for everyone, is that we have a number of exploration target areas, and the drilling only touched into 2 of those areas. Okay. In one of those, the first area, it was a virgin, completely untested by drilling area that was primarily targeted off of geophysics. And the geophysics was very interesting. It was a really quite chargeable, large scale body. Chargeability is a type of electrical property that we measured with our geophysics. And typically you see areas of, good mineralization, they either have a chargeable pyrite halo around them in a porphyry, or they could actually be chargeable themselves. So it's a bit complex with geophysics, what the thing is telling you. But in this case, we opted off of the geophysical data to drill directly into the highest tenor chargeability plus conductivity anomaly. They were coincident. And let me talk to you about the surface. The surface was covered by a thick layer of gravel that had been transported over the top. Because of that gravel, it's both good and bad. Good, it hadn't been drilled before because no one had seen anything other than basically transported dirt. The bad, no one had ever seen it before. So we didn't really have any idea of what the geology was, because you're not seeing exposed rocks to map or understand or see veining or really get any geochemical data. So with that kind of targeting, that first drill hole, I thought it delivered some very interesting results. So it's about 500-meter hole, and we got I think it's 122 meters. To pull up the press release, but 122 meters. Here it is. 134 meters of 0.22 grams gold and 768 ppm zinc. Now that's interesting to us. Obviously, on its own, you'd say, oh, 0.22 grams gold. Oh, what do we care about that? Well, now that's the first hole into the system, large system. Next hole, we're going to aim it a little bit to the south, where with our new magnetic modeling, we've identified a large magnetic body. And so the theory here, that the hypothesis that we're working with here, is that that gold has flowed off of this larger body that potentially is represented by that magnetic anomaly. And it's quite close to the surface, and it's quite substantial in size, and it's totally untested by drilling. So that'll be the next place that would be a prime candidate for drilling. And from my perspective, to be able to identify that system and the next step in that one drill hole relatively soon from identifying the system is pretty good.
Yeah, and we were to that point, in that hole one, you had the alteration that you mentioned earlier. So you intercepted intermediate to argillic to philic alteration, with also strong pyrite presence, which
Lots of pyrite.
That is also what the discoveries nearby have been associated with. With again, the grade being like they have similar conditions, different grade. What's that difference there? What are your geos telling you as to essentially what I'm asking here is where's the grade on the system?
Where are we going? Where's the grade? That's what we're looking for. That's the whole idea here.
Yeah.
We don't know. So we're hoping that it's south, just south of where we drilled in that magnetic anomaly. That's the hope for this. But I do need to be clear about something. It's not just like, is it there or not there? Oh, it's not there. We move on. There's 9 target areas here. Each of them have a number of kind of ways to attack. And so, because we've got such a big land package, that question is a bit nuanced, because we've got different, what I would say, domains. Okay, so part of the project is an uplifted block, part is a downlifted block. And so then you've got a fault running through, okay, which runs northwest. And then you've got, different geological models apply to different targets. So some of them are more porphyry targets, some of them are more high sulfidation epithermal targets, okay? In this case, in the case of hole 1, we're still learning what this is. It's a little bit unusual. We did not, obviously it's gold. You cannot identify that visually in the core. So, a little bit of a surprise. It comes with zinc, which is a distal element, normally a bit further from the heat source. And so, those numbers, we're hoping they juice up as you get closer to the source, which would be that magnetic anomaly in theory, okay? So in that case, because of the presence of zinc, we can tell we're a bit far. We'll come into this mag anomaly. Do you want me to share screen and show you, or you want to kind of look at it later?
I'll put it up on the screen right now, because I do have the presentation here. So as you're talking, I'm looking at it, and then
That's
know
slide 19.
Yep. Yeah.
Yeah. So in the center of that, you can see that there's something called Cruz del Sur target. That's the mag. Starts at surface, the pink, and basically as you get deeper, it blows up in size. So what we're doing in the last few weeks is we're running trenches to try and pull off that gravel up and down this system, which is several kilometers north-south, and this is just one of the targets, several kilometers north-south, run trenches across, pick up the rocks, sample them. We already picked up some rocks, which is, reasonably high in copper and visible. But that doesn't mean anything. Again, you have to be very comprehensive and systematic. So the trenching that system, we find the best parts of it, then that'll help us to confirm this magnetic anomaly is related to mineralization of this kind of tenor, and then would be able to punch a hole in, bang, and that would be the kind of the test of this target. But then there's 8 other targets waiting. So and that's the part or areas even. So it's quite a good project in that sense, is that we've got a lot of great, prospects.
The deeper magnetic chargeable target anomaly here on slide 19, how deep do you think you're going to have to drill to hit that target? Because Filo is drilling 2-kilometer holes essentially.
Yeah, they're in line. So if you look at the Cruz del Sur target, is also magnetic. So basically it's like a magnetic thing that's coming up and moonlighting at surface. So we'll start at the surface and we'll just come straight through into the deeper bit. So it's not an A or B, you hit it or you missed it. We're getting more and more into it as we're drilling. And so what we'd be looking for is, as you're drilling, you're looking for changes in alteration. You're looking for, potentially if you can sight visually, you're looking for visual indications of copper. If it's a gold deposit, which we'll see, we wouldn't be able to visually see that. So we'd have to get that out of the lab. But starting from surface is really, and then as you get deeper, you're getting more into it.
You're not drilling right now, though, as far as I understand it. The season has turned already in that part of the world. When are you going to be drilling?
Yeah, so it's a step-by-step approach here, Antonio. We've been out, and I'm going to convey this shortly to the market as well. We've been working we're out in the field. It's well progressed. We've been trenching, and we've been sampling and mapping. Trenching, for example, as I said, in this system and in some of the other priority targets. And so we wait for the results of those before we spot, sight, and kind of announce anything next in terms of drilling. So it should be kind of a late Jan and early Feb close to this stage where we'd gather all this data, and that's pending. And then we'll go, this is stage 2, and I'll announce it. But it'll be exciting, and it'll have a lot more weight behind it at that stage with the bulk of this, answering some of the questions we need answered before we drill. And that will help us significantly with, the next step.
Correct me if I'm wrong, Alan, but if I remember correctly, I listened to an interview or presentation of yours, and I was under the impression that you would be drilling by the end of this year. So kind of November, December, something along those lines. I might be getting that wrong, though. But so have you been slowed down? And if you have, why?
No, we've not been slowed down. I would say that I generally say that the field season starts in October and runs through approximately May. And these are approximates depending on weather. Mm-hmm. And I'm not familiar with any statement that we would start drilling by end of December. Having said that, it's totally possible that I said it. But what happens is that when you review all the data sets, so in the time since, let's say June or July to now, you review all the data sets holistically, you look at, and we gather more data. For example, we collected magnetic susceptibility data on all of the drill core that we've collected to date. And you do more interpretation. You kind of stage out the project in a way that makes sense. And it doesn't make sense in some of these prospects to go straight to a drill hole when you can do a much cheaper, much more effective drill hole in a couple of weeks if you've got some further surface info, particularly from trenching, particularly in a system like this. I'm telling you, this has got gravel cover. There's a big mag anomaly. We'd love to drill. The question you would ask me if I went and drilled that straight away is, why would you throw away millions of dollars or $1 million on a drill hole when you could have tested at the surface for $10,000? And I would say, you're absolutely right. I should quit.
So only if you're wrong. I mean, that junior mining is funny that way, and I'm putting that between parentheses because it's not. But if you went and drilled that and made a discovery, you'd be the king of the world. But if you went and drilled and there was nothing there, then everyone would hate you for. So it.
Well, it doesn't matter what everyone thinks. That's my thinking. It doesn't really matter whatever. Big picture. This is going to be an amazing copper district. We've got a great target. I'm not going to drill it without having the best possible information. at a very low cost. That's the amazing thing about trenching. You bring in the backhoe, in one day you've got a 150-meter trench. Your geologists are sitting in there, they're seeing all the rocks. They couldn't see anything before. And so that's super valuable, super, super valuable. So we're doing that now, and then we'll follow that up with stage 2.
But it is Cruz del Sur that you want to drill first or only? Is that going to be the only focus of your next
Again,
drill
would
program?
be super premature. I can tell you that the targets that right now that our team is working on are with trenches and sampling and mapping are here, Cruz del Sur, the Rincon area, the Camino area, the Meseta area, and the Cumbre area. And actually, it's kind of comical. We're going through all of them because there's a lot of interesting stuff. So those are the main ones up to Cumbre. At Filo Sur, and I don't want to bog you down with too many names, but that's a 4-kilometer long trend where we had only got one sample, and it was at the northeastern tip of it. It's alunite that we only identified recently. No one had seen it before. And it had 4.2 grams gold and something like 250 ppm silver. Okay, so rather than drill something there, you get your guys walk up and down that 4-kilometer trend, pick up as many rocks as possible, cut a few trenches through, and see where the width of this thing pinches out. If we've got something there which is 50 meters of 4 grams, that would be amazing. But we don't know. So we got to go and trench, right? Got to go trench and sample. And so you asked me where I'm going to drill. If I trench and sampled something like of that tenor at Filo Sur, I would be drilling there. But if I sampled and trenched somewhere else and I got different numbers, so the priorities and the ranking will change, but these are the targets that are in play as of today. Yeah.
Right. Where I'm going with this is thinking again about money. You've got what I would guess by now is about 10 million bucks in cash. How many meters does that get you? Or how far does it get you? Or more specifically, or actually more broadly, what questions are you going to answer with that $10 million? I mean, we speak in how many ever months, and you're like, okay, spend all that money. These are your questions that I bought you with that money, essentially. What are those questions that you're going to be answering?
Well, as of now, let me speak about now, and then I'll tell you about later. As of now, the questions we're answering change, varying depending on the prospect. I would love to bring Stephen and the team on, talk to you more technically, but at a high level, at Cruz del Sur, we're answering the questions of what's the tenor, the type of geology, tenor of mineralization, type of geology, and can we expose as much as possible so we're able to select the best location for the drill hole. And we're also wanting to see if that magnetic body that we've identified in the geophysics corresponds to any kind of expression at surface, so that we don't drill a barren thing, right? So that we don't waste $1 million. So we spend the 15,000 to know something that's worth $1 million, right? So that's the answer we're going to get at Cruz del Sur. There's 2 targets here, actually. You can see that there's a Stockwork Hills target. The added benefit here at trenching, we're going to identify the southern extent, and we're going to see more information on the Stockwork Hills target. What that is a historic target. It's been very lightly, I think, shallowly drilled here, not very deep. Kind of missed the main zone of stockwork, I think, because of a projection error. And so we're looking to see, you can see we've got some rock chips there on the surface of 0.1% copper. We're looking for the sweet spots because we're finding with the cover, it's not that clear. And so trenching that up as well will work up a second target. So the second question we're answering here is, can we work up Stockwork Hills to be a worthy target, or is it still going to be kind of a mid-tier to low priority target? So there's a chance that target gets upgraded, but for the time being, I think it is where it is. Then we go into Rincon. Now, I'm probably speaking gobbledygook to people who don't know our prospect names, and I've watched many presentations where that's the case. So let me try and orient you on a map here. If you head over to page 6, okay, you see that we've got this map laying us side by side with Filo, and we've got these red areas. These are our priority kind of target areas. And see that 13-kilometer strike, kind of if you go north, so go up on the page from the 13Ks, you see a red body there. That's the Rincon target area. And what that is it's a new target that was previously, before we came on, nothing was known about it. It wasn't even on anyone's radar. The way we found it was, I mentioned to you that we systematically sampled. We found a soil anomaly there, copper soil anomaly. And following that copper soil anomaly, we went into the road cuts in that area. We sampled those extensively. And in one road cut, we found 200 meters or so of sheeted veining. And the graded, the grade varies. I think some of them may be close to a gram in gold, but the average over the 200 meters or so was a 0.1 grams gold with some anomalous moly in there as well. Okay, that's one road cut. Then we traveled south within that same area, the same red area that you see, traveled south, put another trench through. This was late this season, this year. And then wow, more sheeted veins. Okay. So we start sampling that. We were like, it's actually looked better. Then we did another trench, it looks even better. We couldn't sample it because the snow came, we had to leave. The second trench we sampled, another 150 meters or so width, 0.2 grams gold. Okay. These are all just trenching the place that we identified as anomalous in copper in the soil grid. So what we need to do here is continue and identify how far south this thing goes, because the soil anomaly continues another 1.5 Ks. Okay. So we're going to trench all the way down and see, because even between those road cut and the trench, we had a doubling in the grade of gold at the surface. Okay. So we're going to understand better the surface geochemistry, the surface geology, the vein density, which is a key driver of which is a key kind of correlating factor to grade. Then we're going to answer the question of where's the juiciest bit to drill? Because sitting underneath this large scale kind of target is a number of geophysical features that we can target with, because we have all the data sets. We've got magnetic, chargeable, and conductive bodies sitting under there. And so there's a beautiful cross section you can see in our press release on Rincon. And so that system, we're going to expand the scale, size, understand more about the grade, pick the best place to drill. And there's an added question, like at Stockwork Hills, there's an added question that has the potential to add another target to our mix, is that if you take that soil anomaly and you go east, there's another one, an end of grid soil anomaly. And actually, if you go to page 8, where you see Rincon, you go down, you see another blotch of orange there. Yeah.
Yep.
That has the potential to again shape up to be a target. We need to go and do more work. So when our guys are out there doing the trenches, they're going to do some recce over there. And if we're pulling up more sheeted veins, more rocks, that's another target. So A, work up and prove up the Rincon target, and then B, see what that adjacent body is and what we can learn about that. And as we step through each target, each of them has an objective that we're trying to kind of answer. But broadly speaking, the question is, can we locate the best place to place our next drill hole?
Well, okay. So here then, in that case, how much money do you want to spend before you have the best place for your next drill? Because that's essentially the most pressing unanswered question is, where do you drill next? How much does that cost you?
Yeah, I would say that the answers from this, and the answer might be in some of these places we're not ready, in some of these places we are, right? Some of these places we are pretty ready. We just want to find the best place. In other places that we need to really work them up, like that Filo Sur 4-kilometer trend with the gold, like we're really premature to talk about drilling there. We sample the heck out of it, understand what it is, trench it, learn what the system is, what the geology is, then we can make some calls. So to directly answer the expenditure question, this phase of work that we've started, I anticipate it's going to cost 1 to 1.3 million Canadian dollars, right? And we've already started it. And so we come up with the answers and we take the next step.
So at that point, you take the next step, which is drilling, but you are sure that you're going to be drilling in 2025, like irrespective of it all.
Yeah, of course. I mean, look, the objective of this company is to make a discovery. And so as much as we can, we're driving towards the drill bit. So the objective here is to do a drill campaign. The question is of where, ranking, priority, and so forth.
Right. But when it comes time to go and actually drill this thing, again, I'm thinking mostly about the money that you have right now and where exactly that's going to go, and how much is a meter of drilling costing you?
Yeah, I don't want to give you a non-answer. I'll start with an answer, then I'll qualify it. Okay, so between 800 to 1,000 Canadian dollars a meter, all in, can be expected. Now, I need to now qualify it, which is depends on how deep you're going. Okay. It depends on how big your overall campaign is. So if you have a bigger campaign, the cost per meter comes down tremendously because a lot of the fixed costs include mob, demob, as in getting the rig there, getting the water trucks there, getting them all back. So you want to have an envelope of drilling that's reasonably large so you can reduce the per meter cost. But the drill campaign that we did 2,200 meters earlier this year. It was about that. So about 1,000 Canadian dollars a meter. We did a quite deep hole. We did a 1.2 kilometer hole. So that pumped up the per meter cost a fair bit. When you're doing holes, the schedule that the drillers give you is that between X and Y meters, it costs this. And as you get deeper, they ramp the cost up. And those costs go up dramatically after a kilometer. So when you get into the deep drilling like Filo is, you see the costs just escalate in a very, very big way. The good news is some of our targets and the majority of our targets, they start relatively close to the surface. In some of them, like Waseda, we're getting to 400 meters under before you hit the top of the target, but that's not a problem. So we'll be able to stay within the cheaper bounds of the drilling until such time as we're justified to get into the 1.1 to 2 kilometer range in some of the other holes.
Yeah. Yeah, that would make sense. But I'm trying to get a better understanding again of your whole budget. What is G&A going to look like? At the beginning, you mentioned that the 170 that I came up to, which was the average for the last report, 9 months, included listing costs. What's your targeted G&A and where is that going to be?
It should be about 100,000 a month. So 1.2 million a year.
Yeah. Okay. Well, you living in Kenya, it could have been 100,000 a year, but I don't think that's really doable in Canada.
No, here's the thing. And let me explain to you where the G&A is going. I think it's important to understand that.
Please.
It's not cushy office rentals or, sometimes you get this impression that people are living the high life off of this G&A money. It is legal. A lot of it is legal. So you've got, anytime you want to, someone exercises a warrant, anytime you got to do any transaction with your legal properties or corporate, you do legal. As far as, remember, we're operating also in Argentina and Chile. So we've got lawyers in Argentina and Chile as well, managing the ground and the administrative aspects. That all classifies up as G&A. Then you've got share, and I just want to break, you seem very cost focused, so let me explain this. The share registries like Computer Share, they also charge a fair bit. They hit you with a monthly bill, okay? And we don't have, for example, an office outside of Argentina. We just have an Argentina San Juan office. And we have a camp, and we have ground maintenance costs and legal costs. And then from there, it's my salary and director salaries. Those are on the record. And that's the G&A. What also goes in there is marketing. So conferences, advertising, and any kind of raising awareness activities will fall under there.
What do you want? That's a good answer. What do you want to spend on marketing? Is it a target percentage that you want going into marketing?
I don't think about it that way. For example, the way that I look at this in marketing is the results will drive this company forward. Let's try the best to apply as much of the funds as we can to the exploration work and also pick the most effective exploration work. I think you can see that that's what I've been trying to do with this campaign. On the marketing side, it's how do you spend a dollar that goes as far as possible for raising awareness of the company and introducing people to the company, so that the right people who are interested in this kind of exploration project will buy it. And that's the approach that I've taken with the marketing. So it's not a fixed amount of spend. I pick the highest ROI events during the year to attend personally. That's because of time and money. And then I pick the highest ROI online channels to kind of market through and let people become aware of the company through. And anything outside of the highest ROI isn't worth our time or our money. And that's how I'll think about it. So I'm not going to take every interview or every conference. I'll take the most important conferences, the most important interviews. That's why you're here. And people should get to know about the company. And if they like the idea, then they should, get involved.
But you're trying to flatter me, which is only fair after you implied that I have no games with the ladies earlier on. So I'm going to remember both of those. Jokes aside, how do you, in that marketing, what's been interesting to me recently is how do companies balance expectations while also attracting it, because you do want to attract interest, but you don't want to overpromise. You don't want to be at this point. You don't want to be an $80 million company, or maybe $100 million company or whatever, because that would be too high of an expectation for that early on in the process. So how do you manage those expectations, where in your case specifically interesting because you're next to those two big discoveries? So yeah, how do you go out there, talk to people, manage those expectations?
Well, I think it's as simple as just being honest and putting the facts forward. Okay. And I think let the expectations then emerge from the facts. And so I don't think it's unreasonable. And this is my perspective, truly. I don't think it's unreasonable to look at, for example, our land package and neighbors, and then say, look, they're on the same Miocene age belt, and say that there's copper going through. You can see it in the soil. So like if you look at slide 8, Antonio, that's real data. I don't think it's unreasonable to look at that and say, look, these guys, they have a chance. I don't think that's unreasonable. And so I think we put the facts forward, and let people draw their own conclusions. Obviously, I'm very bullish on this. That's why I've invested my time, my life, my own money into it. And so I'm going to convey that enthusiasm. And I don't think it's my job to convey any kind of discouragement with it. I just be honest with the facts and explain what you're enthusiastic about and why, and let people make their decisions based on that information. In this case, I don't need to go one. I think to be honest, it's hard to, as I was trying to say earlier, it's hard to overstate the importance of this, because it's very difficult to find a good copper deposit. I saw an infographic from BHP recently talking about how, copper discoveries are going deeper and deeper and fewer. You saw, I think Mike Christie from First Quantum put an article on LinkedIn as well, just saying, look, we're not finding copper. And so when you find it, which is what's happened here, this is important. I don't need to manage expectations around that. This is unquestionably important. There's no replacing copper in electrical conductivity, so that the demand for copper is not going anywhere. So the question is of supply. And when you're looking for copper, as Robert Friedland says, the acorn does not fall far from the oak tree. And he's the master copper finder.
That's it is a good saying. And that's a conversation that we can also have. If we go into this, we're going to be here for another couple of hours, because there's a whole lot more to be said there. And you are right. The 100 grand that you told me about G&A, that does not offend me. I think that is a good range to be in. And you mentioned that part of that is also salaries and whatnot. According to your last management information circular, your total compensation was $116,000 in 2023. That was before the company went public. Your CFO had a total comp of $58,000 for that entire year. Directors were not being compensated. I know that's changed now based on the last financial statements. How is that going to look like? How do you think about executive compensation? And then more specifically, I know there's a lot of questions here, but is that tied to performance in any way, or how do you determine executive compensation?
Look, in listed companies, there's generally a compensation committee. But in the case, how do I think about compensation? I just think that you look at it from a cost benefit perspective. Nothing should be egregious. And if the company is in dire financial situation or requires to be lean, then things will have to be made more lean. And the evidence of that is when we were running for the first 2 years, I didn't get paid, neither did the directors, right? So that only kicked in, I think, last year, and for the directors earlier this year. So that's it. We have to be flexible. It's a junior mining company. There'll be lean times, and there'll be times when you can compensate for work fairly and not egregiously. And I don't think that any of these numbers are egregious or unfair. I think they're fair compensation to get top tier talent. And I say that because the kinds of people that we have on our board are really, really great value add people. Guys like Stephen, who've built companies, built like Mirasol. He built Mirasol in South America and has done, been involved with many discoveries. To have someone of that caliber on the board and also assisting as an advisor, technically helping drive the program. You don't get that without paying, but you also don't have to overpay for work, right? You don't have to overpay. So, all this to say, look, we're fair. We're in the bounds of what the market, you have to pay market to get people. So you have to pay on market, but there's no reason to pay above market and not get the value from what you're paying for. Just like any other thing, just like how I think about marketing or how I think about exploration. That's no different. Is it tied to performance? Well, a listed company is assessed on performance every day, and it's on the share price. So you can see the share price going up and down. A large portion of the compensation that we give, for example, to me, would be options, and they're tied to the performance of the company. So if I'm able to drive as best as I can the discovery here, I will be rewarded. Okay. So the cash component of a junior mining company's comp generally isn't why talented people are getting involved. There are plenty of people who get involved for that cash salary and just like to stay on that. But really, the kinds of people that we have in Mogotes have the opportunity to get a much, much higher cash salary elsewhere. But that's not what they're here for. It's not about salaries. No, it's about discovery. So that's where you said, is it tied to performance? It is tied. When those options are valuable, that's when really that the members of the team will get compensated in a big way.
Do you have a fixed rule for the options where you say it's 10% or 20%? How do you determine the share-based compensation?
Oh, I've actually had someone go through an exercise for me. I've reviewed. It's not consistent across the board in junior mining companies, and it's really just a little bit scattered. There's no hard and fast rules, basically, in terms of how much you give. So it's the board's discretion. Yeah, in our case, it's also a little bit different because out of 3 years of operating, we only had one option grant, and so it was a little bit of backfill. But I think that it's like my salary is in the discretion of the board. I can't speak to that, and so same with the board of directors. It's a little bit above my level, but what you generally do, and what I would do, is collect all the information on compensation for peer group companies of similar market cap doing similar things that are listed, and just look at what's kind of fair and what's on market, and that's what you kind of want to do.
Yeah, you're not on the board of directors.
I am on the board. I am.
Oh, okay, because you said okay, but that's partly
Yes,
it
but
is in your
it's a
hands.
board decision. It's not like
Sure.
not my. Yeah.
Okay. Because I thought you were as far as I understand it, you're CEO and director. So yeah, well, that's fine. I just want to clarify. Well, are you going to need more staff this year or going into potentially a drill program in 2025? Do you need more brain power or more manpower on the ground? Is that going to increase?
No. We did, for example, we had two drill rigs up this year, although we didn't get to start turning the second one because of the snow. We were going to manage just fine. It does get a bit stretched on the drilling side of things. And so what we do there, we bring in seasonal guys, and they come in just for the drill season or for a couple of months. They help. So we call them technicians. So we bring in more technicians. In terms of geologists, we're set. In terms of intellectual horsepower, we're set. And so it's just about, operational hands to help. Then, yeah, so we get like, additional logistics guys or drivers or technicians. And then we have to add more vehicles sometimes to ferry people around. But that's all included in that kind of indicative cost of drilling that I gave you.
We've already gone over the time that you promised me, so I'll work toward wrapping up. I know we'll have future conversations, plenty of time to talk about the stuff that I'm forgetting to ask you here, and people listening, do add on whatever I'm forgetting. Let me know, send me an email, tag me, whatever on social media, whatever you do, do it. Let me know. I will ask it in a future interview. What about you, Alan? What do you think that I've forgotten to ask you here? What you came here hoping to talk about, but I failed to bring up?
Oh, I think you did a fantastic job. I would just say that I think that maybe a segment after your smell test would be like, why is this company exciting? A lot of the focus in junior mining seems to be about, let me find the dirt on this company and a reason to shoot it down. And I think, look, it's justified considering the performance of the sector and the kinds of things that you see. But in some cases, and in the cases where people make, a good return and they make an exciting discovery, make a lot of money, it's because they were optimistic. The optimists are the ones that do well in life and also in, financial markets. You see the potential and you back it. And that's where you make not just mineral discoveries, technical discoveries, biotech discoveries. And so, focusing on the shooting down aspect is fine and it's justified and warranted. But let's go, what's exciting? Like, what's exciting about Mogotes here? What's exciting is you can make a multi-billion-dollar copper discovery. and it's just sitting right here, and it's not been drill tested. That's the exciting part. And maybe it goes without saying for some of us, but it's worth restating. I think things are good, and there are good chances, and this is an exciting place to be. Not just exploration is exciting. The opportunity to find something, it's no one else gets this chance to work in this kind of thing. So I would just say that would be a nice thing to I think throw into your repertoire after cash burn and smell test. Is like, why is this exciting?
Well, I believe that the business case can be exciting, and again, important how a CEO answers those questions. That's more important to me rather than what they say. Typically, with the way I do it, I've done both, by the way. So I was getting a little bit maybe personal. This interview is not about me, but I lost half my money in junior mining first while being only the optimist, and that seems to be the norm in the space. And then swung to the other side, and then maybe for a long time didn't deploy a lot of capital. And after that, I started kind of going toward the middle, where I started working toward a framework and a structure as to how do I actually go through these companies. And to me, and I stole Craig Perry's structure essentially. Well, he gave it to me fair and square. And so he says size of the prize, cost of the test, chances of success. And then within each one of those three categories, there's a lot of questions that need to be asked. And a lot of the things that we were talking about today, or where my questions came from, was chances of success. That's what I'm trying to determine for myself. So I appreciate.
Yeah. So size of the prize is kind of clear here now over the last 5 years. Cost of the test you've gone through. So you're talking about chances of success. I think it would be interesting to bring on Stephen and talk through the multiple geological factors that kind of coalesce to make a world-class deposit.
Yep, that's exactly what I'm looking forward to. Thank you so much for your time today. I really appreciate it.
Thanks, man.